Okay, right guys, right, this basically is just an add-on to the last video. If you know what you're doing, the last video, the 5-minute kiss strategy, should be fine, but this will help those people, in particular Stephanie. I need you to listen to me now, Steph, TK, Hans, anyone that doesn't know what's you know, when we come in the room, what direction price is going to go, you know, from the off. And I'll show you why, you know, sometimes you're perhaps a little stuck on direction. Okay, and I'll show you this hedging strategy, right, is a way to take that decision away from you, basically. Okay, and if you get this, you're going to need to demo it, I think. If you get this, the one thing you need to understand, Stephanie, right, is that if you get your timing right, which means just get in, don't hesitate, right, don't hesitate at all, just get in, okay, because if you do this right, then you can't lose with this, right? On the GU you can't lose, on the EU, EG and the UCAD you won't be able, you'd have to be very, very unlucky to lose both your trades in this, right? In fact, the GCAD's probably the only pair that I wouldn't use this on unless you're experienced, because that does tend to spike both ways. Okay, so you know, and you will soon realize, Stephanie, that if you use this strategy, this little hedging strategy that this video is basically about, you will soon realize that you cannot lose. You can't lose. Yes, you will lose a trade, but you will win in the other direction. Okay, and I'll show you exactly now how we're going to set this up. I have been demoing it. I demoed a bit on, well, I say demoed, I traded it on Friday, and it was successful the 2 times that I traded it. And there wasn't a lot of momentum on the Friday market. Monday markets are the same, you know, so you might want to fiddle with your stop losses a bit. My actual recommendations, to start with this, I'll show you basically what to do, but my recommendations would be 5 pips on the GU, 4 on the UCAD, and perhaps 3 pips on the EG, because it doesn't give that many. Okay, and basically if you use this system right, by the time one of your trades has lost, you will have at least a 2.5 to 1, okay, a risk to reward ratio of 1 to 2.5, at least a minimum, just by the time one of your trades has lost. Okay, and I'll show you why. All right, so let's go through a few recordings. It could be a long video again, guys, but not much I can do about that. All right, I'm going to start with an earlier one, number 47. Okay, and I'll try, because sometimes these, you know, it lags a bit. So, right, first of all, we come in the room. Okay, I'm going to use the GU for most of these, in fact all, but I will highlight, you know, them where I see them on the other pairs as well. Okay, so GU, look, you know, you come in the room and this is what we've had. This, it doesn't know what to do, does it? Basically, you're up here, you're outside here, you've got an 8-hour arrow, but you know, this daily has created a decent sized trend really on the 8-hour there, on the 4-hour, as you can see. The 1 hour's been going up for a couple of days, and we are through the orange line here. So basically, you come in the room, as we just have, look, you can see the time there, and you are not sure which direction this is going to go. Okay, so what you need to do, right, we're going to be using the 5-minute chart and the HA chart. Okay, what you need to do is to hedge it. Okay, now you can see prices coming up to the BB band here. Okay, so we're going to be looking here now for any sign. Right, we're on the BB band, it's still green, so just wait a second. You can see quite clearly that has pretty much flattened out here, so it's quite a strong point of resistance, this. Alright, so all we're waiting for now is either this to pierce it or some sign here. Okay, or momentum to stop. That's another thing, guys. You don't always need momentum in your favour, but as long if those two go quiet, you know, after this green, now if they go quiet, then usually it's preceding a down move, you know, or a move in the opposite direction, I should say. Okay. Right, so I will be fast forwarding through it, guys, but I will point out where you should, you know, got if I do miss the actual point. So let's see if we can just get right to the point. Right, well, we missed it for one there. Right, we did pace. I'm going to go back to the beginning on this. We did pace the BB band here, and you can see, okay. Now I'll have to let it run this, guys, because it's important, this point here. You write on the BB bands, guys. You write on the BB bands. You don't know which way it's going to go, whether it's going to continue on up, or because of the 148 and daily, whether it's going to come down. So you're going to hedge it. Right, you can see a wick there. Looking for any sign here. Anything here. Momentum has gone quiet. Again, you know, this is what I say, when it goes quiet, it's not, you know, flashing green now. Wick. Right, you can enter the trade there. I'm going to pause it. You can enter the trade on this. Okay, because it's forming a wick here. Right, you burst the BB bands, it's completely flat here. Right, you could enter this down. Okay? Right, what you're going to do now is when price comes to this 5-minute orange line from above here, you're going to take it up when we have a sign here, or again on the momentum. Now, what you need to do with your stop loss, guys, is as Dips has been saying, just put your stop loss above the BB bands. Right now, I've said 5 pip is a good recommendation from when you first get in, but if 5 pips is inside the BB bands, then just take it a little bit outside. Okay? Alright? Right, so let's move on. Right, so you're still in. I didn't clock the price there, guys, by the way. It doesn't matter. 70, so you'd have been 2 or 3 pips outside here. Right, so let's say it was 72. 72 we'll call it, okay? One stop 72, we're looking for down. Yes, alright, it's going against you a bit, but look, it's still not pushing up. Let's fast forward. Right, you're on the 5-minute orange line. Now what you're looking for now is a sign to take it up. Okay? Sometimes you might have to wait for the next candle, you know, to form, but you know, sometimes it'll come through like this one did here. But then on this, you'd have seen, you know, there would have been a sign. Well, there was. It was that one there. You see BB band and then a signal and up, and that was your sign to take it up there. Okay. You'd have taken it down there and up there, but we're coming off the BB band here. Okay, there, down. So we're looking for signs up. Look, BB band's flipping up here. It may be the price might need to come back to this BB band, and then we'll take it up. Okay, so that's what we're going to be looking for. And signs, as you know, momentum, BB band flip ups. If you're on the BB band, that's another thing, Steph, right? Generally, when you're on the BB band, right, if momentum's not flashing against you, and it's going to turn. Okay? Just trying to fast forward a little bit, get to a point. So we're still in this trade now, down, that's winning. Right, but look, green, you're on the BB band here. Okay? So it's looking green here. On the BB band, come on, just give us something to, you know, sort of like give us a hint that you're going to go up. The thing with this and all, Stephanie, I'm just going to pause it here, right? The thing with this strategy, Steph, you cannot focus on 2 or 3 pairs. You're going to have to pick one pair. You know, it's no coincidence that Dwayne has the success he has, and he's only trading the GU. You know, I'll mention about Rock in a bit as well, but Rock is only focused on the GU as well. Okay, so it's still on the BB band here. This in itself, sometimes, you know, this will be a trade anyway. You know, that's gone from 70. So if you got in at say 68, this is 56. Now that's a 12 pip trade, so you might want to take that anyway. Sometimes, you know, this hedging strategy does this. You don't have to hedge it. You can say, well, that's 12 pips, I'm taking that anyway, and then wait for the next opportunity. But the point about this, Stephanie, let me tell you the point about this, right? If you go into every trade knowing that you're going to win that trade, okay, then it will stop the hesitation. You won't be worried about taking this down against that trend, okay? You won't be worried taking this up in a minute if it, you know, if we get some on the next candle, if we get green or we get a signal here. You won't be worried about it because you know one way or the other that trade is going to win, okay? And once you work that out, Steph, once you have said to yourself, okay, I'm not bothered, I'm going to win, I'm going to lose 5 pips, but I'm going to win, because this trade, now if I hedge this up on the next candle, right, and let's say it goes up here, right, this trade down is still winning, then the trade up is winning, but then let's say it hits the 5-minute orange line, comes down here to the BB band, right, alright, I've lost my 5 pips up, but look how many pips I've won down. You know, it'll be 3 or 4 times as many as I lost. Okay, so you cannot lose, and this is turning out to be a nice down trade. You would have taken this. You would have taken this as a win rather than a hedge. Alright, we're going to move on. Yeah, you see, that would have been a nice win. Alright. The hedge, if you were hedging, it might have been there and it might have been there. Okay, so you had a stop loss, say, here. Right, and you had a stop loss, say, here on the up trade, yeah? So it went like that, it went like that, both are still winning, then all of a sudden, bang, all the way down here. So this trade up lost, but this trade down here won, you understand? And it won by 2-3 times as many as you lost. Okay? You understand that? Right, I'll show you on the GCAD how it works on the GCAD. Here, look, you took this trade down, then you hedged it there, up. Bang, it comes down here. Eventually it took a long time, right? You trade down from here, won, and you only lost whatever amount of pips. Okay? So, let's fast forward. I need to get to a point where I can show you a really good hedging opportunity. Oh, excuse me. And the thing is, Steph, you have to hedge off a BB band and off a 5-minute orange line, or just through it. Alright, you cannot think, oh, I'll hedge from there to there, because that's a big enough win anyway. Alright? Waiting for this G to come up now. Yeah, it didn't go up. Didn't go to the 5-minute orange line. Right, you might consider this now. You've taken this based on the yellow, okay? Coming up to the 5-minute orange line. So you've taken this and you're winning at the moment, alright? You're looking for an entry point here. The BB bands have flipped down here. Right, alright, price isn't pushing up, but any sign, you know, red momentum here now would be a sign to take this back down. Hedging again, but again, once you realise, Steph, that you can't lose if you do this, because one way or another, even, and I'll show you one of these in a bit where it takes ages and ages and ages, but it keeps going like that, right? As long as it's not hit both your stop losses, you will win. Come on, G, you gotta move on. You know, taking it up here. You might have taken it down there. It's not going anywhere at the moment. It's not going anywhere. But you've not lost, because your stop loss is below this BB band to take it up, and your stop loss to take it down is above that orange line. Okay? Would have been a 5 pipper, it would be above that orange line. And there you go. You see, it's coming down still. Okay, I'm going to fast forward again because I need to crack on with the video, guys, as you know. There you go. So your up trade would have lost for 5 pips, because you're a few pips below here. But what's this? It's, you know, 51. Well, it's less than 10 pips, but again, you've got to look at the market. If you were 5 pips, your stop loss might be down here. But you will notice that the distance between here and here, right, is 5 or 6 pips minimum, right? So if you're taking it from the bottom BB band, by the time you hit there, you're 5 or 6 pips up already. And if it comes up here and hits your 5 pip stop loss, 10 to 11 pips up. Okay? The same in reverse. Right, again, you might have taken this up here, right, based on the fact that it's a green. Okay, we're on the 1 hour orange line. What I will say, Steph, I'll just pause that again. What I will say about this is, right, when you get this kind of setup, you know where it's going to. Alright, so if you're confident enough that that 8 hour signal is going to take price to the 4 hour orange line, right, then you're looking for this signal to get to the 5 minute orange line, and you're looking to take it down from the 5 minute orange line. But if you're not confident that that signal there is going to take price to that orange line, because the trend is, you know, on the 1 and 4s is quite strong, okay, and you know, price has been bouncing off the 1 hour orange line anyway. If you're not that confident, then hedge it. So you could have taken this up. It's 41 there. Let's say you were 2 pips late in, so you got in at 43. Okay, now that means that your stop loss is actually 38. Okay, a 5 pip stop loss, you'd be below this line at 38. Okay, right, so when we get to this orange line now, or maybe, you know, something shows here now to take it down, we're going to take it down. Okay, let's fast forward a tiny bit. Come on. Right, you see how we're right on this BB band now, right on it, Steph. Momentum's still against us. If this goes quiet, we can hedge this trade down. And we're going at 43. Look, you're already 5 pips up. Okay, it's on 48. So that trade up is 5 pips up. At the moment, let's go. Come on, come on, come on, come on, come on. Show me a sign. Right, it's going quiet. It's gone quiet. Okay, oh, flash of wandering. Let's see, we need it to get quiet again. This is around the time of news and all, and there might be something come out in a minute. Just show the signs that you're going to go down, and then we'll hedge this. Let's say, Steph, even if you got in early, right, you're on 48 there. If you got in early because you thought, oh yeah, we're near enough to the BB band, this will happen until you perfect this. This will happen. Your stop loss to take this down, if you got in early at 48, right, would be 53 up here. Would be 53 pips. Okay, now what did we say this one was down here? We said we got in at 43, so the stop loss would be 38. Okay, so there's the 2 stop losses, right? 38 and 53. Alright, we'll work it off that, because we know it's only 5 pip stop loss. Come on. Still on 48. Right, you see how it's flattened, Steph, here? Now, there you go, red momentum. So that's your cue to get into the downside anyway. Okay? And there you go. At the moment, you were in both trades. You were in that, well, this one's level now, 43, but the down trade is now winning. Right, at 43, what did we get in at? 48, I think we said. So it's 5 pips winning down. Okay? Your stop loss is 38, I think we said, didn't we? So let's fast forward and see what happened. Right, well that happened. Right, that's 38 there, where price is showing there. 38. So you've tripped your stop loss to the up trade, right? Your up trade is over. Your down trade is winning by 10 pips. Okay, so you've lost 5, but you're winning by 10 on the other trade, right? So basically this hedging strategy, if you get it right, and you need to demo it, you need to work on it, is a win-win. You can't lose basically. The only time you could lose is, you know, if it spikes, you get some news or something comes out and it spikes both ways very rapidly. It does happen, but it's very, very rare. And you know, I think you'll find it tends to happen on the GCAD when the UCAD's go in one direction and the GU's go in the other. Okay, you know, so that's maybe the reason to stay away from the GCAD on this. Okay, so you would have won this trade already if you'd have just gone for the 10 pips, but let's say you're going for open TP and we'll see where it eventually goes. Well, it went lower than 38 because that's showing where price is, so you know, you had at least a 12 pip win there before momentum turned on you. Okay, again, if you wanted to do it again, but again at this point, Steph, it's all about judging the 1 and 4s, and you know, now that this has gone super, you should say to yourself, well, I've got an 8 hour, the 4 hour super, that's going to the 4 hour orange line. So now you're just looking for trades off the 5 minute orange line, maybe the HABB band to take it down until that gets to there. Okay, but again, if you're unsure, then hedge it. Okay, hedge it. Right, so we're going to get to the point where you know, this does hit the 4 hour orange line, guys, because that's another perfect place for you to say to yourself, I'm going to hedge this. I'm going to hedge this because I'm not sure if it's going to go up now. You know, and I'm not sure if it'll continue on down. Okay, so this is hedging strategy really is all about, you know, if you can't judge direction correctly. You know, if you can't judge direction correctly, then use it. But if you know the price is going to go down, then Stephanie, all you are looking for is things like this: the BB bands flipping down, signal or momentum, you know, and then in. Okay, but if you need to hedge it, Steph. Right, you're on the 5 minute orange line. Again on the GU. Just show you quickly what happened. Look, you were up here, but if you'd have taken this, Stephanie, off the 5 minute orange line, your stop loss would have been above this BB band here. Okay, somewhere above this 5 minute orange line here. Okay, that's all you need to do, Steph. Right, let's get to the point where we hedge. Again, need to move on, guys. Look, again, you know, Stephanie, it's perfect. You've just got to have the confidence that this is going to happen. But again, Stephanie, if you need to use the hedging strategy, master it, use it until you're more confident, right? With this hedging strategy, if you did it on virtually every trade, I think you're going to have a win success rate of 50%, yeah? But you're going to win every day, pips wise, because it always gives more pips than you lose, basically. Just one other thing I want to tell you, Stephanie. Rocky had a terrible day on Friday. I'm just going to pause the video there. He had a terrible day on Friday. He won 2 and lost 4, and he finished break even. He finished break even, Steph, with a 33% win rate. And you know what? If he had did open TP, he would have won the day. But he only went for 10 pips on the 2 winning trades. You know, but if he'd have gone open TP, he would have won the day with a 33% win rate. Okay, Steph, and when you get better and better at this, Steph, trust me, you're going to be 80, 90%. Okay, right, now then, has this signal, you know, has this candle finished, have this setup done its job? Okay, you're not sure, so what do? You hedge it, right? You're going to hedge it, you're going to use this strategy again. Okay, now, so you're looking for a sign here or here to take this up. You're going to put your stop loss here below this. Right, that's a sign straight away there. You see how this candle's inside here like that? That would be enough for me to take it up. Momentum's not flashing against you. take it up, stop loss down here below the BB band. When we hit the 5 minute orange line, we're going to take it down with a stop loss up here above the 5 minute orange line. Okay, when it permits, we want it to, give us a sign that it's going to come down. So we're in this to the upside. Okay, we got in at, well, it says 31 there. Let's say we got in at 30 to make it nice and even. I'm going to put the stop loss at 25, wouldn't it? Okay, let's fast forward. Get right to the point. Right, okay, so we're already 5 pips up here, Steph. Understand, we're already 5 pips up and we're on the 5 minute orange line. Now we're looking for a reason to take this down because we're not sure whether this setup has done its job. Okay, we're not sure what's going to happen. Well, it's green momentum at the moment, you can't take it. Okay, let's fast forward a bit. Still green, we're now 6 pips up. Again, it looks like it's not giving much momentum here as well. Now this went up to 41 and you were in at 30. So that in itself was a 10 pip win, right? But you've got a signal now. So do you hedge it? Or do you take that 10 pip win? That is entirely up to you, right? If you want to hedge it because you think it might go up more, or you think it might continue on down. Okay, you got a signal, you should have been a non-fat signal if you were going to hedge it, right? But you might say to yourself, well, that's a 10 pip win, I'm going to take that anyway. But the point is, Steph, just let me pause again. The point is, Stephanie, that when you took this here up, you had every intention when it hit this orange line of hedging it, right? In other words, taking it down, right? So you knew when you took this trade here that you can't lose. You cannot lose, okay, unless you're very unlucky and it spiked down like that, took your trade out and then spiked all the way up here and took this down trade out as well, right? And as I say, it's very rare that happens on the GU, the EG and the UCAD, but look at the wicks here on the GCAD. This would be the one to avoid, the wicks here, and that's happening because the GU is going down and the UCAD is going up. Okay, that's why them wicks are so prominent like that, and that would be the pair to kind of avoid doing this on. Alright, Steph, but you knew when you took this trade here that either way it was going to win. Okay, right, let's fast forward a bit more because we want to see what happens. Right, so again, you did have a win in there, a 10 pip win, but if you weren't sure, then you would have been taking it down. So this wouldn't have hit your stop loss. So you're going down now and up. Let's say you hedged it. Excuse me, you're taking it both ways. All right. Both trades still running. Both trades still running. Still running. Yeah, and still. Yes, the long, it's not much we can do about that. And there you go, let's say you took this one down, as we said here, you hedged it. Right, if you'd have hedged this trade there, because you wanted more than the 10 or 11 pips it gave, right, you've lost the down trade for 5 pips, because your stop loss would have been up here somewhere, okay? But you're winning the up trade. We've got in at 30 and this is now, well, 44. Again, 5 pips would have been close. I'm not even sure if that trade had lost yet, but either way, you're still winning. The trade won. You hedged it and the trade won. 14 pips is 3 times the 5 pips that you might have lost at that point. Okay, yeah, 45. So that's a 1 in 3 win hedging it. Okay, yeah, you lost 5 pips, so it turns out to be a 1 in 2. Alright, Steph, but that's basically based on the fact that you didn't know whether that big setup there had done its job. Okay, so you hedged it. if you can, Stephanie, watch the other video and learn to just go in the direction of the flow, right, until you get to a point like that where you're not sure what's going to happen. Okay, and then hedge it, and that was a perfect place to hedge that trade from. Okay, Steph? As I say, all you need to do is watch for the signs, BB bands. Look, it came down here, all it did was touch the BB band there. Right, you didn't get a signal, but I'm not sure if there was a signal there. I think there was a yellow at one point, and then it's disappeared. Right, but anyway, excuse me. That was that one. Let's have a look at a more up-to-date one. Number 60. I think I've used this one in the last video, but there was, again, a decent point to show you on the GU again. Right, okay. Again, we're going to use a GU. Stephanie, look at this. Look at this. We're not sure what's going to happen here. All the last signals are up. This is the one I told Sergeant Pippa it was definitely going up, right? On the 1 hour orange line, but you're not sure. You're not sure because there's no signals here on the 5 minute yet, and you're not sure. You're right on the 5 minute BB band, so that's your cue to take it up. Okay, you can see there's a wick farm there. You should have been in that. All right. Well, it's 8:59. It's just before. But you should have been in that anyway if we were in at that time. Okay. To the upside, right on the 5 minute orange line here. Pushing towards the BB bands here. We're looking for signs now to take this down, to hedge it, because again, we're not sure what's going to happen here. Alright. So, let's see. Generally, your signs are BB band here, signal here, wicks, that little just cross inside as well. That's, a big giveaway because price then is turning. Okay. And momentum. Again, sometimes it's just momentum going quiet like it is now. Understand, it's not flashing against you. Okay. Let's push on a bit. Still flashing against us, so can't take this down. Sooner or later, Steph, you're going to get in one of these, and some big Brexit news or something's going to come out, and it's going to go 50, 60, maybe even 100 pips for you, and all you'll lose is like the other trade, the 5 pip trade, and that's when it'll, really click, I think. But again, Stephanie, if you go into this, don't even contemplate, I don't know if this is going up, so we'll wait for the candle to go up. It doesn't matter. Hit it, hit the trade. Expect to lose 5 pips because the other trade, whichever way it is going to win. Right? So you hit it here because you expect to lose 5 pips. You hit it here because you expect to lose 5 pips. But both times when you've hit that, one of those 2 trades is going to win. Okay? Right, BB band slipped down there. Okay, still green. So doesn't matter, you're still in a winning trade from here. I don't know, it says 58, so shall we say you got in 2 pips, 60, right? Your stop loss is down here, 58, 53. Okay, you're on the BB bands here. This stops flashing. If you get a signal, if it flashes red, maybe a wick or something here, or a signal here, and then you'll take it down. Right, well, if it's just that little bit of a red candle, yeah, right on the BB bands, you could say to yourself, I'll take this. Right, and if you notice there, you're on 71, so your stop loss will be 76. Okay, 53 stop loss, down, 76 up. Alright. Right. Still not touch your stop loss. Right, so your stop loss was hit at 76, right? But you were in at, what did we say? 60, didn't we? 60, and it's 78. 18 pips. 18 pip win, Stephanie. right, and you lost 5 pips. Okay, that might be a cue to exit the trade, but momentum's still green. You're right on the 5-minute BB band. Again, you know, this is still pushing. Okay, do you understand now, Steph, that if you entered that trade there right off that BB band saying I can't lose, right, yes, you lose 5 pips, but look what you made, 18 to 20 pips, and you lost 5 pips. Okay, all because you didn't know what was going to happen with the 1 and 4s. Alright, as I say, use the other videos, Stephanie, TK. The 5-minute strategy, right, has paid dividends for me for over 4 years. Okay, and it will for you if you master it. Right, but if you're unsure, use this hedging strategy as well. Just one other thing, pick one pair, make sure you're focused on one pair, and you could trade the GU like Dwayne does there, like Rocky does there, right, and you can maximize, and you will see everything that's happening, Stephanie, and that's the better part. Try and stay out of the chat as well, you know. And the other thing is, if you're going to do this system, Stephanie, stop listening to Anissa. That's no disrespect to Anissa, right? Stop listening to Julian. It's no disrespect to Julian, right? Okay, you need to focus on one strategy, and it's no coincidence that Anissa is successful doing only her strategy. Julian loves his blues, successful doing his blues. You know, Kevin the Sniper, again, hugely successful because he's only doing the one strategy. And Dwayne, again, I'll use Dwayne as an example. He's doing this strategy and killing it, absolutely killing it. Okay. Just before we go on here, I will point out that exactly the same happened here. Look at this. Let's say you're going on this one, Steph, here, and then you hedged it down here, right? Well, your stop loss here would have been below this line, so it came down, it didn't go out, right, and then it started going up again, still not out there. Neither trade has lost at this point there. Then it comes down again, hits the orange line, and then bang, continues on up, right? So you lost your down trade for 5, 6, 7, 8 pips, whatever it was, but your up trade from here, which is 37, so we'll say 37, say you're going at 40, right, went to 70, 30 pip win. So you lost whatever amount of pips, whether it's 8 pips because it's the G card, and then 30 pip win, Steph. Okay, that's the way you've got to look at it now. Just take it, don't worry about it. You're going to win if you hedge it right. Alright. Okay, I'll just fast forward through this one and see what happens. Can't recall. Alright, this then, you know, for me, hedging it now, you could do, but again, you know, you've still got a lot of room here. This is bouncing, this could go up or down, so yeah, you could hedge it here. So you would have taken it down here. Alright, there might not have been much of a sign there, but you know, I'm not sure if there was a yellow signal or not, and then it's disappeared, and then again off the 5-minute orange line. But again, your stop loss would be way above that there. Okay, and there you go. You see, you would have taken it up from there, right? So your stop loss had been down here, your stop loss would have been up there. You're not sure what's going to happen, neither am I, because I'm not seeing this video. Still not lost either trade. Can you see what I'm saying, Steph? You've still not lost either trade yet, because it's not made its mind up which way it's going to go. And you have, between that BB band and that orange line, there's about, well, what's that, 70 to 80, there's a 10 pip distance there, so you might have had 8 pips. So either way, at the moment, it's an 8 pip victory, but because you've not hit a stop loss, when it does hit a stop loss, whether it's the up one here or the down one here, right, if there is an 8 pip and you had the 8 pip difference, okay, then you're going to win by at least 13 pips. So you lose your 5 and win 13. Okay, we'll watch it out, this one. Just want to see what happens. There you go, you see. It went up, so this trade up, or that trade up there, would have won for 13 pips. If not more now, look. You see? See, Steph, it hit your stop loss here, your down stop loss. So you lost 5 pips and won 13. 13 plus. You know, it's like 88, I think that is now. Not sure what you would have got in that, but probably 18 pips again, Steph. Okay, so, and that's all it is, Stephanie. That you just think to yourself, right? I mean, I'll tell you what. I'll just show you again on this. This is that extraordinary day on the CADs, if you remember. Imagine if you did it here with this one here, down and then up. Right? Look at that. That's what'll happen one day. Or if you did it here, oh, I'm taking it down, and then I'm going to take it up there. Look at that. That will happen one day. Look at the GCAD here. You took it there, okay, or you took it there, right? You hedged it there, and then that happened. Do you know what I mean, Steph? You're going to get in one of them one day, and you're just going to get 80, 100 pips, and it's. And the best part is, Stephanie, when you actually take this, you know you're going to win because you're going to hedge it. So your timing will become perfect. You'll say, right, I'm on the 5-minute BB band, I'm taking this up because I'm going to hedge it at the 5-minute orange line. Can't lose. You understand? This, again, there, look, came down, 5-minute HABB band, there's a wick on that candle there, then you've got a signal. Woomph. Okay, so you'd have hedged it there and there. Right? Alright, so I've got to move on, guys, because this video will be massive otherwise. Right, now there's a couple of, I'll show you a couple of old ones, Steph. One of them in particular, on when you don't need to hedge, basically. Let's see if I can find it. It's a great example, right, of when you don't need to hedge. Right, again, look at this. Right, look at this. You're not sure here. You're on the 1 hour flipped up BB band. You've got a 4 hour signal up. You know, you're not far off the orange line. It's a massive uptrend, but you've got a daily. So you're not sure here what's going to happen. Okay, so, right, I'm just going to use this as an example, Steph. This happened before the session. You can see 8:45 there, right? If you'd have got in there, right, and decided to hedge it when you hit the 5-minute orange line, you're a bit short here, so you could say, well, I've not got in yet. You might have got in. There again, you know, as long as, if you get in, as long as you've got a decent sized stop loss, you'll be alright. Your stop loss will be down here. Right, but this is one of them days, Steph, where there was a lot of volume in the market and the moves were giving you enough to not have to hedge it. Okay, at first we hedged this one. Okay, so I'm going to fast forward and show you what happened. Right, now you'd be looking to get to the downside because you're right on the 5-minute orange line. Okay, you've got this trade. Yeah, you're 8 pips up. That's 80 to 88. So let's say you got in 2 pips late, so you're 82. Okay, you're right on the BB bands here. Look, you're looking for a sign to take it down. Momentum's still against you. Need that to either flash red or stop flashing and a signal to appear here. Maybe, you know, maybe something show here. I can't see something coming on the 5-minute, but well, there you go. You come outside here, 91, and you've got this kind of wick here. So that should be a sign to get in. Right, 5-minute wick. You see how it's pierced it here? I'm going to pause it there. That would have been a sign to get in there. The wick started to come back down. Get in. It's coming back down there. Get in to the downside. Okay. So stop loss is up here somewhere. Your stop loss from here is way below this orange line here. You've hedged this one because you weren't sure what was going to happen. And the 1 and 4s, and there we go. There you go, Steph. You see, you lost your trade up for 5 pips, but It went from 91 to 66. It's a 20 odd pipper. It's a 20 odd pipper for you, right? Just because you didn't know what was going there, because you took it both ways, right, Steph? It was an absolute certain winner. Okay, if it continued on up, you'd have won. If it continued on down, like it did, you won. Alright, yes, you lost 5 pips up, but it's a 20 odd pip win down. Alright, it is that simple, Steph, right? Now, again, you're here now, back on the BB bands. Alright, you get something here, momentum stops flashing against you, take it up, because you're way outside here, on the BB bands here, you're not far off the orange line there. Yes, there's a daily, but you're not sure. You think, yeah, you know, it's going to go up. Okay, so anything, any sign here, take it up. Right, still red momentum, so you can't. Right, pausing it. You've got a signal here. Right, that, if you were still in this trade down, that would be your exit. That would be your exit. Okay, you'd have made a 20 odd pips there, depending on when you got in. 88, say that there's a 22 pip move, you lost 5, you made 17 pips on that trade. Okay, green momentum, get in, signal there. Okay, let's go and see what happens. It turns into a green. Nice. So you were in, let's say you got in at 2 pips short again, 60, 66. You got in at, right? Not near the BB bands here, so you're okay at the moment. It could continue on down, but you've not touched the orange line yet. You want to be on this orange line, right, to take the you know, to hedge it if you're going to hedge it. But that, you went into this trade expecting, Stephanie, to hedge it when you hit this orange line, okay? Because basically when you think like that, Stephanie, when you think, I'm going to hedge this, I can't lose. You can't lose. You can't lose. Okay? That's the way you look at it. Alright, so, again, you've still got plenty of green momentum. I'm going to fast forward, guys, because this is getting a very long video. Right, okay, it never, you know, shown you anything down. This trade now, when you go in at 66, is 84. It's already 18 pips. So, Stephanie, when you've got a situation like this, there is no need to hedge it. That's an 18 pip win. You don't need to give pips away. You understand? You're out in this BB band here. But the thing is, Steph, get your head around this. You entered that trade with the intention of hedging it because you know if you hedge it, you are going to win. Okay? You are going to win. So you went into that trade. There was no fear about taking that trade because you were going to take it down from here. Okay? And if it carried on down, you would have won the down trade. And the thing is, guys, this is the point I've got to make, especially to Stephanie and that, right? The distance between, say, going in very early here, say, you know, like Anisa gets in very early, she talks about 3 or 4 pips, you don't want to lose them 3 or 4 pips, she's right, okay? With this strategy, you can get in virtually straight away. Alright, so as I say, you got in at 66, the orange line was this flip down BB band at 80, well, it might have been a bit less than 80, but either way, right, you'd have been at least 6 to 8 pips up when you hit that orange line. Yeah? Now add 6 to 8 pips to the 5 pip stop loss. What do you get? 11 to 13 pips. Okay, so basically, if price hits this orange line, comes down and hits your 5 pip stop loss down here, right, it's come down 11 to 13 pips, which means you've lost 5, but you've won 11 to 13. Do the math, guys. You know, if you can work that out, if you can get your head around that, then you know that getting in as early as possible, with first sign, right, will pay dividends. Alright, but again, Stephanie, this is, as I say, this is one of them you could have just said to yourself, I don't need to hedge it, right? It's a 20 pipper there, right? You've got 18 because you got in at 60, at 66. Okay? you didn't need to hedge it here. No need to. You've taken the pips. You could say to yourself now, well, I'll tell you what, I'm going to take this down. You know, but I probably wouldn't here, because this is looking like back to the 5-minute orange line and then up. Okay, but it might come further. But let's say you did take it. There's another trade in here, because what you'll do is it might come down here. It might come all the way down here. Right? Basically, what this looks like to me is a second move. You know, setting up on the next candle there. But even so, if you took it, right, then hedge it. Hedge it. Take it and say, all right, I'm going to hedge it. It starts to go up again. I'm going to take it up. Right? And one of them trades will win. All right? Yeah, okay. But again, look, Steph, you're 87. Let's say you're going at 85. 72. That's a 13 pip win in its own right. You know, you can just say, I'm taking that. But the point is, Stephanie, TK, anybody else that's struggling, is you went in. You got in early here because there's no hesitation, because you know for a fact that this trade, whether you hedge it or not, if you hedge it or not, is going to win, because the intention was to hedge it. Okay? It will take away the fear of waiting for this candle to get going, right, before you actually get in. Okay? So, let's say you're on the BB band here. You took it up, 74. Yeah, we'll say 74 there, because that's where price is, but you hit the BB band 2 pips. 74, so your stop loss would be 79. You're not below this BB band. Sometimes I would say, you know, that's probably the safest place to be, but you don't want to have too big a stop loss here. So you're in this trade down. You've stayed in it, even though it's a decent, you know, enough win anyway. And you're now hedging it. You're taking this one up. You've already took that trade there, because as we said, it was an 18 pipper. Okay, it was worth 18 pips to you. Right, so you're still in, nothing showing yet. Right, still up to the 5-minute orange line again. So what did we say? 70. Well, I can't remember what we said we got in that. Anyway, you know, you're getting the point now, guys. It's not hard to work out this. You're just thinking about of getting in as early as possible, and you know, the fact that you're hedging it means you can't lose. And there you go. You know, so you took this one. Okay, let's say you did hedge it here, and then you hedged it here. Right, this one down might have lost now, but this one up is like won by twice as many pips as you lost, 3 times as many pips as you lost on that trade down, because you only lost 5 pips here, right? And this is 72 to 89. That's getting on for, well, you know, it's a 17 pipper at the moment, you know, and you lost 5. So again, you've won if you hedged it. Obviously, you know, like sometimes, as I've said, like with that one there, you don't need to hedge it. That was an 18 pipper in its own right. Why would you hedge that? You just take the pips. You know, you might have done the same there on the way down and then said, but this is the psychology that I'm trying to put across to you guys, is that if your intention was to hedge it, then you go into that trade really early, really early, as early as you can get in, right, because you know you cannot lose. Okay? You understand that, guys? You know, if once you get your head around that, this strategy will benefit you hugely, and it'll even, you know, as I say, it'll even, I'll pause that there, it'll even sort out a lot of people's mindsets, right? Certainly where Stephanie's concerned, because she's all over the show. So I think, Steph, if you do this, darling, I think I suspect on Thursday when I'm back in the room that you'll have a good story to tell me, you know. And again, as I say, you got in really early here, guys, and look at this. There was no need to hedge it when, you know, it just went up and up and up and up, and that was a nice winning trade in itself. It was 72 on it, if I remember rightly. Let's say you got in at 74, 96, 22 pipper. 22 pips. There was no need to hedge it. Okay, guys, and that, again, this strategy is all about if you don't know what's going on here, right? But again, if you want to use it, do it properly. Demo it for a few days until you get it exactly right. And if I promise you, if you're getting in as early as possible, right, because of the distance you will have between your stop losses, right, like 5 pips on the GU would have been somewhere here to take it down and somewhere here to take it up, right? The distance there between the stop loss and the win point would have been more than you'd have lost here 2, 3, maybe more times. Okay, so 5 pips GU, 3 pips EG, 4 pips UCAD. Leave the GCAD for now, guys, until you're more confident with it. Okay. Excuse me. Right, I'll just show you one more. Another early one. Another really early one. 2029, I think we said, didn't we? There you are. Okay. Okay, here, the reason I wanted to show this, right, look at this, you're thinking, whoa, we've got a daily blue, but against a massive downtrend. Okay, so what do you do there? Right, you're outside on everything, here, this has just happened, you're approaching the 1 hour orange line, so you basically have seen this here, doing this. Okay, this is late on in the room, so it may be, right, that you got in here, right, and in here to the upside, yeah? Okay? Maybe that you got in here and here, down, and hedged it up here, right? So, your stop loss would have been above this 5-minute BB band, so it's not tripped out to the upside. Your stop loss would have been 5 pips below from wherever you took this, whether it be this one here, so you'd be down here somewhere. Okay? Okay, now it's not a lot of volume in this market, as you can see from one BB band to the other there. That's basically only 10 pips. Right, so bear that in mind, guys. You might say to yourself, well, I'm not going to 5 pip stop loss, which would be up here. You know, I could do 4 maybe, or even 3 on a market that's not got as much volume in, right? So you're increasing your pips per win, all right? But the same principle applies here. You're hedging it because you don't know what's going to happen because of this here. Okay, so you've took it up and you've taken it down. You've taken it down here, and let's say you took it up here. Okay, so you've got a stop loss below here. I'm not going to say 5 pips on this one because of the lack of volume. All right, and you've got stop loss above here. All right. Still going nowhere. Right, coming down now. So, you're taking it here. You're already. That's 8 pips. There's not a lot in the market, so it might be getting close to tripping your up trade stop loss. Okay, but you're only 8 pips there, so you still got a bit of room on that stop loss. Okay, there you go. It's hit your stop loss to the upside, where it was 4 pips because there's a lack of momentum, and it's now 60 to 49, 11, 12 pips now. Right, so let's say you had a 4 pip stop loss, and look at this. Look at this. Right. But the reason I've shown you this, I'm going to pause again there, is because sometimes this happens where you get, just not going anywhere for a while, and then all of a sudden, bang, it breaks out. It's called a breakout as it happens, guys. When you've got price going like that, MT will quite often in the room put a couple of lines like that across and show you that price is going nowhere, and then you break out of that. Okay, but again, you took it down here, you took it up here, whether you took it down here and you took it up here, eventually the trade won. Okay, and that's the reason I wanted to show you that one. I will just show you again on the GCAD. Again, similar, but you've got a daily here. So you had a green, take it down, you hedged it there, taking it up, yeah, it took a while, and then bang, down. Right, you're right on the 5-minute BB band, you think it might go up with the daily, take it, straight away, take it. Hits the 5-minute orange line, take it again, bang. Okay, so you hedged it on both occasions there, and you won massive from there to there, and then you won massive from there to there. Yes, you lost this up trade for whatever amount of pips on the GCAD, and this up trade here for whatever amount of pips on the up move there, but you won that, and you won that. Okay, so again, you can see it there on the UCAD as well. Look, you know, if you've taken it straight away, right, and then you hedged it here, and look what happened. And the thing is, if you'd taken it straight away, guys, right, before you even hedge it here, this trade is winning by a good few pips. Okay, so when it comes up here, you're still winning by a lot of pips to the downside, and then that happened, bang. Alright, so that is the strategy, Stephanie, TK, Hans, anyone that wants to do it. That is how simple it is. What you've got to do now, just let me have a drink, is to pick one pair to do it, to use this when you need to use this, and again, I can't stress enough to you, right, that if you have every intention of using this on a trade, this hedge, right, that when you go into that trade, your psychology is going to be that this trade is going to win one way or the other. It doesn't matter to me, it's going to win. So your mindset will improve for one, but not only that, your entries, you know, like this yellow here, you might have said, well, I'm going to take this. You see it? I'm going to take this. You took it. It hit the 5-minute orange line. I'm going to take this. It hits it. Look at the wick there. Right? At the moment, neither of those trades has lost, because you've got a stop loss here and you've got a stop loss here. But again, that's quite a big amount of pips anyway. So you could have taken either the pips on the way up and then either the pips on the way down. You know, but the mentality, the psychology behind it is that you're not going to lose, and it will help you with your timings. You'll become lightning fast, because you don't need to worry, right? Is it going to win? You're not going to let a candle go like this one halfway up here, right? Because it doesn't matter if you get in here, you know that even if it comes down and you get in here, it's going to win. Okay? Honestly, guys, I tested it a good few times now, and every time I tested it, even on Fridays, pretty flat market, guys. I did it twice, and I think I won one for 14 pips and one for 18 pips. Okay, with 5 pip stop losses on a very slow market, I could have got away with a 4 pip stop loss on that GU trade quite easily, because there was no volume in the market. Alright, so Stephanie, again, a few things. If you are going to trade my way, then watch the last video and watch this video and apply both these strategies to your armory. Do not, under any circumstances, listen to anybody else telling you, oh, blues. I know there's a lot of advice in the chat roll, but you have to say to yourself, well, I want to do it that way, and I'm going to stick to that way. Make yourself a checklist, Stephanie, TK. Put it in front of your computer screen so that you see it, right? I'm going to go with the flow. I'm going to use the hedge strategy when I need to. I'm going to bounce off orange lines. I'm going to enter off HABB bands. I'm going to go open TP, and I'm going to put my stop loss behind the HABB bands. And you know, I'm just going to do the 5-minute orange line kiss strategy. And just to point out again, Steph, imagine you took this one up and then you took it down off the 5-minute orange line. Look at this. Look at this. Your up trade for your 5 pips would have lost, but look, because you got in here downside, look what you won. You lost 5 pips, but you won all that. You know, you can't lose, Steph. You do it right, you cannot lose. You get in there, and you get in there. Okay, but you're getting in. Just look for the signs. Just look for the signs, and straight away off the HABB bands and the 5-minute orange lines. That is the zone between there and there. And on slow days, here's the other thing as well, Steph. On slow days, just expect it to go through the 5-minute orange line. Then look for the signs. A wick there, and then on the next candle, look, bang up. Signs here. You got a wick. Okay. Didn't go up much there. I think there's a wick on that one, which meant it went up, but it went up there. Okay, you got a wick here. Yes, it bounced up a bit, but bang down. Okay, again, look at this UCAD here. It come up, wick on the next candle, and look all the way down here. Okay, so Stephanie, you can do this. You can do this. You just have to follow the one way, and I have no doubt that when I come back next week, if you've been applying this hedging strategy and the 5-minute orange line case, and if another thing, Stephanie, if you don't think everything I've said here today is right, put some hours in on the recordings and go and look for yourself. Go and test it for yourself, and you will see that virtually every time GU, EG, UCAD, this works perfectly. Okay. Obviously stay away from the GCAD unless you know it's got a really strong setup, then because it can be a bit of a bugger, that one. Okay, Steph, so as I say, I suspect when I come in on Thursday that you might have a good little story to tell me. The same with you, TK, and any of the other strugglers in the room. Bond, I know you're just starting out, mate, but you've got to pick a strategy and you have to stick to that strategy. Again, Bond, any newbies in the room, B-Dog, there are certain videos you need to watch. The 1 and 4 hour video will give you great information on you know, picking direction and help you out in that respect. If you're going to do the Anisas, watch Anisas videos only. If you're going to do Julian's blue strategy, then excuse me, then watch the Julian's videos only. If you're trying to do the trending 5-minute kiss strategy, then just stick to that. Okay. And as I say, I suspect next week I might see some, especially with this strategy now, some good stories. And Stephanie, you can do it. TK, focus, you can do it. Okay, guys. I'm pretty sure I can't really put any more into it than that. I can't make it much easier than that. That, as I say, this strategy is, you know, really, from the research I've done, it will work perfectly if you apply it correctly. Okay. All right, guys.